So thank you for joining our webinar on natural capital accounting today. The webinar will be recorded and it's going to be available on the A4S YouTube channel afterwards as well. So throughout the webinar, please use the chat box to post any questions or comments that you have, and we'll do our best to answer these during the Q&A or in the discussion where it's appropriate. The agenda for today is a panel discussion on why natural capital is important to approach measurement and the tracking of it, Q&A with the audience, we'll have a spotlight on the A4S briefing for finance on biodiversity, and then we'll wrap up. So the learning objectives of this webinar are, after completing today's course, you'll be able to describe the risks to business due to biodiversity loss and actions that finance can take, and translate the learnings of others from practical examples shared during the webinar on measuring and valuing natural, social, and human capital to your work. So we'll be asking you questions about the content covered throughout the webinar using the Zoom poll, and you will need to complete these in order to get the relevant CPD, CPE points. So as we've said, today's webinar is about Measure What Matters, Natural Capital Accounting. So what do we mean by measure what we mean by measure what matters is how we can measure social and environmental factors and incorporate them into our business decisions. So often an organization strategy will incorporate various social and environmental factors, but measurement and integration into day-to-day decisions can be challenging. So what we hope to do today is introduce some examples of how this can be done and inspire you to find out more. For today's session, we're focusing predominantly on natural capital and biodiversity, but due to the interdependencies between the capitals, it's likely that we will touch on other capitals as well. So now to introduce today's speakers. On the panel today, we have Mark Gough, CEO of Capitals Coalition, here to talk about the Natural Capital Protocol and how the Capitals Coalition have supported its use globally. We also have Cassandra, Chief of Staff to the Chief Financial Officer at GSK, who will tell us about their collaboration with TNFD and the role within the task force, as well as talking through some of the practical examples of GSK's work on natural capital management. Finally, we have Silvia, Chief Financial Officer at Natura & Co. Latin America, who will tell us about Natura's natural capital assessments and the positive outcomes they've seen from their business model, focusing on establishing a path of innovation and social development based on Brazilian socio-biodiversity. So I'd like to kick off by asking Mark the first question. Mark, for those that are not familiar, could you tell us more about the Natural Capital Protocol and how finance has a role to play in its application?
Thank you, Jessica, and hello, everyone. So the Natural Capital Protocol came about because there were lots of different approaches that were being used to understand nature and our relationship with it. In fact, there are about 40, and I know that because I wrote one of them. I saw the other 39, didn't think they were good enough, so I wrote the 40th. Ever since then, I've been paying for my sins by running the Capitals Coalition to try and bring all of this work now back together, because we don't need 40 of them. So back in 2012, there were 40 different approaches or thereabouts that were being used around the world. That community came together and formed what was then the Natural Capital Coalition, which has now been converted into the Capitals Coalition, as we've united the social and human and natural all together. But the actual Natural Capital Protocol was the culmination of all of that experience over the last 30 years coming together. And I think in 2015, if you'd have asked many people in the space, they would have said, there is only one framework to be looking at this. It's an internationally accepted framework used by the EU, used by the US and various other big international agreements. It's been referenced, and it is being applied all around the world by businesses and organizations. And what it does is it takes you through 9 very logical steps and 4 stages of why, what, how, and then so what you're trying to do. And it takes you through that in a very logical process to be able to capture that relationship with nature, to generate useful, relevant, trustworthy information to inform those decisions, as you were just saying, that difficult bit of the puzzle. And we've had it applied by many different organizations around the world. And in fact, now what we're doing is we're now uniting that with the Social and Human Capital Protocol and coming up with an integrated protocol, which will be out later this year. Your other question was around what is the role of finance in this? Well, a lot of the people that come to us initially were from sustainability departments, and they've used this to start to talk about some of the things that they were already looking at. But more and more, we're finding that finance is the home where this should be sitting. And it's actually been written very much in the language that should be right for the finance community. In fact, we've just launched some online training recently, and most of the people entering into that are from the finance community that are looking to have a better understanding of this to take into their companies and into their organizations. So CFOs, the finance community, are the people that should be using this and should be responsible for this in the companies. And we're seeing that again and again. There's one great example, in fact, of one of the A4S companies. I won't mention them by name because they're probably on the line, but the head of sustainability there left, and now the CFO is now very much responsible for this. And that's leading to preferential finance. It's leading to a better understanding. And so the sustainability team did their bit about bringing that into the thinking, and then have handed that over to the CFO and to the finance team there to be able to run it, which is exactly where it should be. This is about understanding the impacts and dependencies, and that's where it should sit with finance.
Brilliant, a really comprehensive answer, Mark, and hopefully that's convinced everybody. So could you describe the business case components that our audience can use as they make the case to their colleagues and engage them on taking a capitals approach and sort of generate that internal buy-in?
So my background was business for about 20 years before I came into this role. And in that, one of the last roles I was in, I took a board paper 3 times to the same board. The first time I took it, and I thought I'd put a pretty good business case together, and they rejected it quite quickly. Second time, I realized I needed to talk to the board beforehand, so I spent some time sitting down with them. They understood it, but still when the paper got there, it didn't go through. The third time, they literally opened the paper and gave approval to it. And the reason being is because I put in very clearly the benefits, the impacts, the dependencies we were having in such a clear way that it was in a language that the board could actually understand. But it was the same paper, it was the same reasoning behind it, but I've been able to explain it in a way that made sense to the strategy of the organization, made sense to the decisions we were trying to make, and we got the funding straight away and moved ahead with it. So it does make a significant difference if we can actually put the information into a format, particularly when we're talking about CapEx decisions and things like that. We need to have information in a way that we can understand. And most of the information I sit on several boards that I get will give me some of the financial reasons, but it won't give me any of these other reasons around nature or people. So those financial reasons, we might do things because we can see the return on investment there. But actually, if we're excluding that relationship with nature, that might leave us open to risks that we're not aware of. It might miss opportunities that we should be having in there. So I have found very few people that would actually want to make a decision with poor information. What we're really doing here is providing better information for better decision-making. And of course, everyone wants to have that better information. You don't want to make an ill-informed decision. So what this really does is put that relationship with nature into a format that CFOs, that businesses, that boards can understand to allow them to be able to make those better decisions. So it's building that business case.
Yeah, that's really important. And I think something that we found from all of our other webinars that people may have attended as well is it's crucial to really understand your own organization and how it works in order to make that business case so well. Mark, what kind of take-up have you seen amongst organizations in applying a capitals approach?
So when we first started, we thought there was about 12 organizations around the world that might like to take this up. So we reached out to them. We had over 500 actually apply for the piloting. And the reason is that most businesses know that this is an issue, and this was back in 2015, but they don't know quite how to manage it, and they need a process to do that. And this offers that very clear, structured process, robust process, internationally acceptable way to follow to be able to apply it. So we've got lots of people that want to bring this in, and there's several of them that want to just use this internally. So you may not see so much externally in the comms and the communications, but actually this is for internal decision-making. This isn't necessarily just for disclosure. This is about helping you to have that information to make those decisions. We're way over 20,000 applications that we've seen now. The number of case studies, we've got really good case studies that aren't that many, because like I say, it's mainly about internal decision-making. But one other thing, I've just got back from Davos, and then after that to the Stockholm Plus 50 event, which is the 50 years after the Limits of Growth report, which was sort of setting out a lot of this movement. And in both of those, it was really interesting because actually I started playing capitals bingo because everyone was talking about the value of these things. They wanted to understand the value, the impact they were having, the dependencies. They wanted to learn about natural capital, about human capital, about social capital. Colombia, I think, won. I got 14 mentions from the Colombian minister in a 5-minute speech. So he won on my scale. But actually the language, the conversation has changed more recently, and we're getting inundated. One other thing, just very briefly, we went to the White House back in 2015. We took a group of businesses there to have a conversation about actually bringing in natural capital accounting in the US. Recently, on Earth Day this year and in April, they've actually brought through an executive order now, 7 years later, maybe in a few things that happened in between. But 7 years later, we've now got that executive order that is now actually making it mandatory in the US to start doing natural capital accounts at a government level. And this top-down approach is really important for business, because we've got about 80 countries now that are looking to apply natural capital to understand the assets the country has. Now, how are they going to get that information? That's going to be reliant upon those major industries and others within that sector, within the sectors that are working in that country. So seeing that happening at that scale at government, within finance and in business, I think is really key. And we're seeing a significant change there.
Yeah, so what you've really highlighted as well is not only is there a lot of momentum, but there's an enormous community as well that people can join and learn from and be a part of. You're not just starting a journey out on your own. This has been going on for a very long time, as Mark's pointed out, and there's been a lot of development since. One of those developments is the setup of the Task Force for Nature-related Financial Disclosures. And Cassandra, I was wondering if you could please introduce the framework and the role you've played in its development.
Yes, so thank you, Jessica. It's wonderful to be part of this panel today and also get the opportunity to introduce the Task Force on Nature-related Financial Disclosures, or as TNFD, as I will refer to in future mentions to you today. I have the privilege to be part of the working group, and I'm working with a group of 34 task force members that span across the finance sector, businesses, and market service providers, along with working with 13 core knowledge partners, of which the Capitals Coalition is one, and over 300 institutions. So why TNFD? And actually it probably ties back a bit to what Mark was saying about business cases. Over 50% of the world's economic output is nature dependent. Nature loss poses a major risk to businesses, while moving to nature positive investments offers opportunities. Businesses can no longer afford to overlook nature in decision making. Nature related risk is as great a challenge as climate risk, and the two are closely interlinked. So the mission of TNFD is to develop and deliver a risk management and disclosure framework for organizations to report and act on evolving nature-related risks, with the aim of supporting a shift in global financial flows away from nature negative outcomes and towards nature positive outcomes. So I think it's we also heard from Mark about when he joined there was 40. We're also trying to do a similar approach. So I think very much creating, I guess, alignment as far as we go. I joined the task force when it was formed in September 2021. Well, GSK was part of the initial working group involved in helping to create the TNFD. As a task force member, we've worked with the Secretariat across a number of different working groups, and I am also the Metrics and Targets Working Group lead. Overall, TNFD's work builds on 7 principles. The first being market usability, the second being science-based, third, nature-related risks, 4, purpose-driven, 5, integrated and adaptive, and 6, climate nature nexus, and 7, globally inclusive. It's important to mention that TNFD is not a new standard, but intends to build upon existing standards, metrics, and data, and where this is available, and where it is actually part of the scope. So we've done a lot of work trying to scope that out as well. As the work of the task force continues, we will continue to work closely with a range of partners to ensure its approach and the outputs are aligned. I think integration is probably important to everybody, and ensuring that that is also aligned with global frameworks for nature-related outcomes, and has been very much designed where possible to also be complementary to the TCFD, so the climate version. Personally, I joined the task force to help all companies have a better understanding of nature-related risks and opportunities, and support them to act through creating a unified approach that is practical for everybody to use. If you haven't visited already, please take some time and visit the TNFD portal to find out more details. And I'm sure, Jessica, you will share the link shortly, but if you want to have a look now, it is framework.tnfd.global. And it's also important to note that Natura is also a company that is on one of the companies that is part of our TNFD task force. So great company here with the panelists today, and could probably share their insights on TNFD.
Thank you, Cassandra. That was really, really good. And I think you talking about the knowledge partners as well, though we've got 3 panelists here today, all from different places with different questions, they're all very much interlinked because this work has so much overlap as well. So please don't see it as separate silos. TNFD and Capitals Coalition both work together and have knowledge that overlaps. Mark?
In fact, actually, next week, we're going to be releasing a paper from TNFD and the Capitals Coalition showing those links and showing actually how they support each other. So it very much is building on what you're saying, Jessica. It is, they're not in any way in competition. The LEAP model that is coming out of TNFD, all of that work, you have to use and understand some of the protocol stuff in order to be able to do that. And we can't actually get our stuff into that risk framework without TNFD. Science-based targets is another bit of that we need to link in the loop. Business for nature, all of these things are interconnected actually, and actually all of us are talking. So that paper next week, watch out for that, because that will help to understand how these things are complementary.
Thank you, Mark. That's an exclusive. You all heard it here first.
Yeah, so, I've got to finish editing it first, so it will be coming out next week. Let's say.
Fingers crossed. Cassandra, could you just say how you think the TNFD applies most to our audience today, and sort of what your few top tips are for helping them get started?
Yeah, so there's a range of intended, I guess, beneficiaries or users of TNFD. So there are investors, corporates, accounting firms, banks, insurance companies, analysts, regulators, stock exchanges. So that's the list that we've got at this point. I'm sure it grows, and we've got quite a number of varying parties that we try to consider as we are developing and evolving this. So tips for getting started, I think the number one is to visit the TNFD portal. There's a lot of work that has gone into making that as usable as possible, and make yourself familiar with the framework. I think build your capability, and Mark's already mentioned, one of their trainings that you can do. I think getting started, and actually many of the people on the line today, or if you're viewing the webinar, you've actually made that first step in building your capability is being here to try and understand more about the topic on nature-related impacts and dependencies, and what you can do to, I guess, help and work within your companies. And then I guess the third tip, and actually Mark already mentioned it, which was great to hear, explore the LEAP approach. So that is part of the TNFD website, and it's developed, in our first version that we released. So all looking at integrated nature-related risks and opportunity assessment. So LEAP is locate, evaluate, assess, and prepare. And very much sharing some guidance. So a great place to start. It's a comprehensive, detailed, step-by-step approach to how you can look at TNFD.
That's really helpful. Thank you. And hopefully everyone can now get started. I see we've also shared the link to the course as well for the Capitals Coalition. So that's also a great step for people to embark on in their natural capital approach. Cassandra, we've got future releases of the TNFD framework coming out. We've had one in March, we're expecting one in June. Can you tell us what you're expecting to see in these future beta versions that come out and how they might evolve?
Yeah, absolutely. So actually the first release, as you said, was in March 2022, version 0.1. And it was the beginning really of an 18-month process of consultation and development of the framework. With market participants and other stakeholders, really seeking as much feedback and input along the process, with the final, I guess, version of or at least the final version at that time, but version 1.0 of the framework being released in Q3 of 2023. Just briefly, the first version that we released, and you can all have a look at it, but included three main core components. It included a set of fundamental concepts and definitions so that you can understand nature and nature-related risks that the TNFD recommends that market participants use when assessing and disclosing your nature-related risks and opportunities. So that was really very much a first step. The second core component was a draft set of recommended nature-related disclosures that were very much closely aligned to TCFD. And then thirdly, there was a prototype guidance for corporates and financial institutes to support their internal assessments. So the LEAP process there. So now looking forward, so our next version 0.2 is due to be released at the end of June 2022. So keep an eye out for that. And then we'll have another version in October 2022 and February 23. So the key priorities ahead for developing the TNFD framework is metrics for nature-related risks and opportunities analysis. So very much you will expect to see a lot more on this metrics and targets in the upcoming versions. The approach to target setting, scenarios for nature-related risk. Data is another really important one. So sources, development, priorities, and accessibility. We're also going to be providing more detail on sector-specific guidance. So working very much closely with industry partners on this, and very much trying to overarch or align with sustainability reporting developments. We have the ISSB, the SEC, FRAG, and others as they continue to come out. And then very much the whole process is underlined this continuous loop of feedback and pilot testing. So 15 months of that, where we will be looking to seek your input and make modifications based on the feedback and pilot testing that we receive from you. So it's important that we do hear from you and have this to try and make this a framework that can be used by everybody.
Yeah, and I think it's really important to highlight that responding in these consultations and sort of feeding back to the TNFD is really your opportunity to shape how it would best work for you and make sure it applies to your sector as well as possible and enables you to use it as easily as possible, because that's the whole point, is that we can do it as quickly and as well as we can. I'm just going to pass over to Silvia now and ask why Natura has decided on focusing its business model on natural capital assessments more than 20 years ago and how it's evolved. So there's three very forward thinkers today at this panel. So Silvia, I'll let you kick off.
Good afternoon to all of us that are connected with us today. Firstly, I'd like to thank you, Jessica and A4S, for the opportunity. It is an honor to be part of this webinar and to be able to discuss such an important topic and in a panel with inspiring colleagues. So congratulations, Cassandra and Mark. You are doing a great job to help us companies to evolve in that matter. And a special thank to you, Mark. Capital Coalition have been a crucial partner in our journey towards impact evaluation. Thank you very much. So for those who may not know Natura yet, we are a Brazilian multinational company of cosmetics, hygiene, and beauty products, founded in 1969. We are a leader in the direct sales sector in the region. Since 2020, Natura is part of the Naturico group, alongside the other three iconic brands in the beauty industry, Avon, The Body Shop, and Aesop. Today, Natura cooperates in more than 100 countries with more than 3,700 stores, 35,000 employees, and 8 million representatives and consultants that work with us. Our ambition is not to be the best beauty group in the world, but the best beauty group for the world. And there's a huge difference on that. Natura's commitment to sustainability dates back to its foundation. It's part of our essence. This journey is very inspirational to me, and I will try to share with you why. We started with a concern for having more natural ingredients in our formulas. And throughout the years, we deepened our commitment to generating a positive social, economic, and environmental impact. In 1993, we became the first company in Brazil to launch refills in the beauty industry. It was an important mark for us. In the late 90s, Natura made the historic decision to incorporate ingredients from Brazilian biodiversity in the manufacture of its products. After some years of comprehensive research, the actives started to be used. In 2000, when the Ecos brand was launched, the sustainable use of Brazilian biodiversity clearly became a platform for the innovation of Natura's products and one of its main lines of research. In 2011, all initiatives to transform social environmental challenges into business opportunities were brought together in the Natura Amazonia program, which is based on three main axes: science, technology and innovation, production chains of social biodiversity, and institutional strengthening. In December 14, Natura became the first publicly traded company in the world to receive B Corp certification, a certification that reinforced at the time that we are on the right path. We have been a carbon neutral company since 2007, at a time when the topic of climate change was less known, although it was, of course, already a pressing issue. This means we offset all carbon emissions that we cannot avoid, and we have goals to reduce activity throughout the production chain. An example of how we are offsetting our emissions is the Circular Carbon Program, which is a program to encourage the people who live in the Amazon forest to preserve the local biome. The project remunerates the families of small farmers, not only for the purchase of inputs and benefit sharing, but remunerates extra for those who really act on environmental conservation. We already contribute to the conservation of 2 million hectares of forests in the Amazon. Now, as part of Naturico Group, we have set the goal of expanding the conservation area in the Amazon forest to 3 million hectares by 2030. So a lot of things to do and a lot of work to do. And as I said, Naturico believes that the value and the longevity, it's a tough word for me in English, of a company are directly linked with its capacity to contribute to the evolution of society and its sustainable development. And in order to collaborate with the wide-reaching change of world needs, it is fundamental for us to measure our legacy. In other words, to measure the impact we are generating throughout our operation. And therefore, if our existence is linked with impacts, the role of our organization is to make the best possible decisions to leverage the benefits generated for the environment and society, as well as to mitigate negative impacts. Because yes, all of us generates positives and negative impacts. Our journey to report on our impact started more than a decade ago in 2010. We sought a detailed understanding of our supply chain for the use of the palm oil, involving a better selection of suppliers using an approach based on externalities. Between 14 and 16, based on this knowledge of externalities, we started measuring our environmental footprint using the profit and loss approach, which quantified the costs and the environmental benefits of our value chain. Following the standards of natural capital protocol created by the Global Coalition, led by the Capitals Coalition, Mark, thanks again, and the World Business Council for Sustainable Development. Based on this knowledge, in 2018, we developed our social profit and loss, respectively with the Natura consultants and with suppliers communities to calculate our contribution in the human and social spheres. Now we have taken an important step by concluding our first integrated profit and loss calculation, a tool that collects data, identifies our impacts, and attributes economic value, and accordingly enables better decision-making. The integrated P&L was created in response to the need to take data-based decisions related to the business and to sustainability. And all of that to say, Jessica, that the answer to the question of why Natura decided to focus on natural capital assessment is very simple. It's because we truly believe there's no other way. we need to be responsible for the impacts that we generate, the social impact, the human impact, and the natural impacts. And we CFOs, like you said, Mark, we are crucial in this journey. We need to lead the way. So this is why this process inspires me so much.
Thank you, Silvia. That was really excellent. And it was great to hear about the journey Natura has been on and how much you've achieved so far, because it's a lot. You've excelled and you're a real leader in the area. So what I wanted to ask was what differentiates Natura's integrated profit and loss, and what are the main challenges for companies to understand and calculate the value created by different types of capital? I think this will really help our audience decide how they can get started.
Great. Jessica, we already did a lot of things at Natura, but we are just starting. That's a lot of things to continue to do. So it's an endless journey. And we are very committed to help others to jump in this journey with us. So the integrated P&L is a methodology with a new value proposition that was developed in the light of protocols that indicate the basis for measuring companies' social and environmental value and calculating their impacts. It is important to remark that Value Impact was the co-creator of this model with us, as well as GlobeScan, which supported us in submitting our integrated P&L methodology for peer review. So we like to partner with great organizations like the ones that are here in order to help us to better understand those impacts. And it's because it's a very innovative methodology. There's no much reference in the market, so it's important for us to have people discussing how to do it. The IPNL considers three groups of capitals, like I said, natural, human, and social capital. The data on the activities assessed range from our supplier chains and extractivist communities, many based in the Amazon region, through the direct operations, the Natura beauty consultants, to the product use and product end-of-life phases that are important as well. What differentiates the IPNL is that in general, sustainability indicators of companies are reported at the output level. Hours of training, tons of carbon, number of people involved, liters of water, tons of waste, and etc. But these indicators are not fully capable of measuring the real impact that a business generates for society. So the main difference is the monetization of the results and its focus on impacts, as opposed to the indicators of mediums, activities, outputs, and outcomes. IPNL makes it possible to compare the relative importance of activities very different from each other, so that trade-offs can be assessed from a broad perspective. Therefore, the IPNL results are directly comparable to the financial results, which helps in integrated management as well as in risk management and reporting to all stakeholders. Let me use an example to help illustrate. One of our business model inputs is the sourcing of raw materials from Amazon. Aside from valuing the output, which is forest management, taxes, and additional income to families, with IPNL, we are also able to evaluate the outcomes, such as reduces deforestation, protection of species, improvement of health level in the communities, and other impacts. This gives us the opportunity to understand the monetary value of their increased well-being, life expectancy, and natural capital. These are indicators that end up being more relevant for decision-making and help us to prioritize. But the most important finding applying integrated P&L is that we discovered in 2021 that for each $1 in Natura revenue, we generate a net return of $1.5 in social and environmental impacts. This is what motivates us to move forward. We are adding positive impact with our operation. So we are super excited with the results. And regarding how companies can start embedding impact measurement culture to their business, I have 5 tips. First one, and one of the most important ones, is start by doing it, measuring the indicators that you have available. And as imperfect as they may seem, start with what you have. Second, link your initiatives with your business strategies. Seeking a win-win result and keeping coherence among them is crucial. Third, prioritize the materiality of impacts. Companies' actions must be based on materiality assessment and the magnitude behind their impacts. Fourth, enhance share value. We want to expand the generation of social value. In order to do that, it's fundamental to mitigate the negative impacts. Like I said, we generate negative impacts as well. This must be the first premises. There's no use in boosting just one front of positive impact if we don't act to mitigate the negative ones. Fifth, and the last one, the social human impact must follow the same logic as the financial impact. Natura's main indicators are tracked quarterly. Therefore, the tracking should ideally follow the periodicity of disclosure of the company's results, feeding the strategy and giving companies room to act and recalibrate their plan if necessary. So the methodology is not simple because the impacts that we generate aren't as well, but it's feasible. I can say to you that it's feasible. And after this webinar, Jessica will share with you our technical paper that explains the methodology in further detail. And I invite you to take a deep dive on this methodology and reach out to us if you have any questions or suggestions, because we want to hear the suggestions. It's not a perfect model, a perfect methodology. And we will be glad to talk to help you out with any additional information you need.
That's really, really excellent. Thank you, Silvia. And we will share that paper. So everyone, if you didn't get to absorb all of that in one go, because it's a lot, it's a lot of stuff to take on, then there will be some more information for people to learn from as well and sort of address those practical examples and get started, as sort of Silvia, Mark and Cassandra have all pointed to, which is the very first step. I'm going to circle back to Cassandra now with her GSK hat on and just ask whether you could tell us about the journey you've been on in developing a capitals approach.
Yeah, I'm more than happy to do that. So, and I guess we were going to focus specifically on water, weren't we? Yeah. As probably a topic for today. So, as a healthcare company, we know that access to safely managed drinking water, sanitization, and hygiene services has a direct impact on human health. We also recognize that water is a shared resource that is essential for a functioning society and ecosystem. It's especially important for us to be conscious of these factors when we're working in water-stressed areas of the world. So therefore, mapping our water footprint across our entire value chain has actually helped us to understand our impacts and our dependencies on water to manage our risk more effectively. In order to do that, we separated the footprint into 3 elements of the value chain. So we had the supply chain, or our suppliers, we have GSK's direct operations, and then we also have the use of our products. So firstly, we determined which data points we wanted to collect. I think that's probably a big theme or a key element, and based on risk and geographical location, which is also very important as you'll find or read in TNFD, and where we would need to apply, I guess, modeling. Although good data existed for our own operations, collecting other data, so, you know, from our suppliers presented a challenge, and data points were often stored on different systems and different parts of the organization and things like that. So there's definitely a need for kind of alignment, I guess, across how this is collected with the data. And then also data from life cycle assessments has helped us to understand water usage for our products. So to give you an example, the amount of water used by our patients and consumers when using our products. actually an interesting fact to note is that product and packaging information was actually quite useful to help with this for some products, as the amount of water needed to use the product is included on the product information leaflet. So it all helped while we were trying to, I guess, model and calculate and come up with a footprint for us at GSK. So, and then lastly, for the supply chain element of the footprint, we use data on the locations of manufacturing sites, and then modeled, water usage for those sites. So that just gives you, I guess, a bit of an idea of our approach to water specifically, and measuring our footprint at GSK.
Thank you, Cassandra. That's really helpful. And I think that something we've seen from both Silvia and Cassandra's examples are thinking about those impacts and those dependencies. And though both have looked at the risks that there are to the business, there's also those positive generations and returns that you can make, as Natura have said, with their $1.5 return. So it's really about thinking about the risks and opportunities in this concept or context. Mark, did you want to jump in?
I was just going to build actually on both what Silvia and Cassandra were both saying, that often we find when people start this, and completely agree with Silvia, the thing is just to start doing it. That actually you've already got a lot of metrics, you've done a lot of this work, convert those outputs, those 1,000 tons of this, those 1,000 cubic meters, into understanding what they mean for your business. That's what we mean by value, what they mean for society. Convert into that first. But what we often find is exactly what Cassandra was saying, is that when you start doing it, you realize there's actually better data that you could have. You realize there's better structures, there's better processes. And often people will start doing an assessment and then say, actually, there's a better way we could do this. And they might spend a year or so improving their data systems or improving their governance systems or improving those things. So it actually helps you in many ways. It's not just about getting those impacts and dependencies. It helps with governance. It helps with the way that you structure things, because it means you really understand what you're doing, what your impacts and dependencies are.
Yeah, and I think that really speaks to the fact that though we're talking about natural capital today, this cross-cuts across all parts of your organization and all types of capitals as well. It's really one big challenge, but we're just talking about a small piece of the puzzle today. In terms of natural capital, Mark, and capitals accounting, what trends are you seeing in the application of capitals accounting?
So I think that the framework, so the protocol is very much written in a language of could. So you could do this, you could do that. It's all based around what your question is. So what are you trying to do? You're trying to get information for a CapEx, you're trying to get information specifically on water, you're trying to understand the business impact or the societal impact. It gives you all of those coulds in there. What we're seeing at the moment is the standardization a little bit of some of those processes, those pathways you would take. So there's several projects. There's one that's just launched today, actually, which is called Align, which is taking all of those biodiversity metrics, because all of a sudden, a few years ago, several different funders decided that biodiversity was quite important. So they all started investing in new actual metrics and approaches. So we ended up with 21 after a couple of years. Once again, same problem that I started with. We didn't really need 21. We need to explore and test it. But now what we're doing with the Align project is bringing all of those together. And that's gone out for consultation together today. So what we're seeing is some of the standardization of some of those processes. Another one is Transparent, an EU-funded project, which is taking some of those standard pathways on water, on some of the things, the same realms that we use within the Task Force for Nature-Related Financial Disclosure. It's taking some of those and saying, so what's the minimum requirement? What should you be doing with this? Which makes it a lot easier for people to follow. So although we've had the vanguard already going out there and testing this and trying to work it out, we're now getting to a point where all companies should be able to pick this up, because there are minimum requirements, there are standardized processes you can follow, and you can build off some of these examples, the great examples we've heard today, and actually start doing this yourself.
Thank you, that's really, really helpful. We've got a couple of questions, which I think, first one I just want to take to Cassandra, which is, couldn't the nature focus have been incorporated directly into the TCFD version 2.0 as opposed to a separate framework? So a lovely, easy question for you to answer there, Cassandra.
So, the idea is that it will be complementary and that it will, but it has to be developed first. So that is really the aim of TNFD, is to actually develop the framework that will eventually sit and be integrated and shared with the TCFD.
Brilliant. I'm sure that was helpful. Thank you. And then I just want to ask sort of Cassandra and Silvia now, what do you see next for capitals accounting, both within your organisation and the wider external markets? So I don't know if Silvia, you want to kick off.
Yes, thank you, Jessica. I think we have a lot of work to do in that matter. We need to try to evolve, for example, the integrated P&L methodology and impact value methodology to a accounting procedure. This is not easy. This is why, for example, at Natura, one of the most important person in that matter is the controller. Because the controller needs to help to translate the impact valuation into accounting procedures. And as you know, the discussion in the market is super hot about that topic, but we didn't find yet a simple way to do it. So I think our main challenge is to try to translate that in a way that the companies can do without an extreme effort to do it. So this is the next step. We want to discuss our internal methodology with ISB, IFRS, and all the entities that are creating the standards to see how we can connect the dots.
Yeah, and by doing that, we're then taking down one of the other barriers that companies are currently having when thinking about this subject area. Mark, did you want to jump in, or I'll pass across to Cassandra?
Just one thing to add to that. So we've just, one of the things with all the frameworks on disclosure that are coming out, so the International Sustainability Standards Board, the SEC work in the US, which may progress or may face legal challenges, we'll wait and see, but also the work that's going on in EFRAG in Europe, is that all of them are working in slightly different ways. So what we've been doing is actually looking at some of the data flows through this recently. And we've kicked off a digitalization project, because in the same way that XBRL does this for financial data, we should start building that into the system now for sustainability data, not wait until we've got all the frameworks and then think, oh, how do we digitalize it? Let's start the digitalization process now. So if you're doing that, you should be able to pull from some of those different systems, the same way as Silvia is saying, in a consistent way. And that's what we need. We need that tagging. We need to be able to understand that and start building it into the accounting systems now. The IFRS conceptual framework asks for useful and relevant information. The accounting framework, we're housed by the Institute of Chartered Accountants as well. So it asks for that information. I would argue most sustainability data at the moment is neither useful nor relevant unless it's actually gone through a process to understand the value of that to the business and to society. So you could argue that actually by reporting this at the moment, you're not actually providing useful and relevant information. You're not following those frameworks. So actually it will become a requirement, I think, on the back of all of this. And I think that the data and the digitalization, the frameworks is one thing. We can get that mandatory. We will do that over time. But also we've got to get the information to flow through the systems, the internal SAP systems and other systems we've got. It's got to be embedded into that. And that's still a challenge, I think.
Yeah, definitely. And that data point is crucial as well, as people struggle to get good quality data and work out what data they need, as well as sort of fundamental to that system. Cassandra, did you want to jump in and answer the original question?
No, I think well, I'll just echo, you know, what Mark said.
Yeah.
I think, you know, integration is key, and also what Silvia, you know, said as well. So I felt recently I was on another thing, it's about getting started. We're on a journey. Like, these are very common things, but actually really true. We are, you know, it's about bringing nature into the conversation. It doesn't matter if you're not in the sustainability team, if you're in finance, you know, wherever you sit within a company, you have a role to play, you know, with this. And there's opportunities to I guess, discuss this with your, you know, your boss, or, you know, your management, or, you know, I mean, and finance has, you know, to integrate this has a really important role to play. So I think, you know, it's a journey, but I think it's yeah, a lot more coming our way on this.
Definitely. And it's worth thinking about, you know, as we've said, the relevance of your information and understanding your organization as well, first, to make sure that this, what you're reporting and what you're using for your internal decision making is actually useful, as Mark wanted to highlight as well. I'd like to wrap up our panel discussion there, but I will give a brief second for anyone if they'd like to add anything else. Brilliant.
Just thank you all.
Yeah,
brilliant.
thank you.
Thank you so much to our speakers. I'm just going to introduce the A4S briefing for finance professionals on biodiversity now before we wrap up the webinar. It's where we've sought to answer some of the key questions that we've heard from finance teams who've been trying to understand biodiversity and its relevance for their organisation. Today, you'll have heard so much which will help you with this. So this is a very short briefing, which will just re-highlight and help you to understand the business case for action, the key concepts, practical actions to take, and where to find further resources. There will also be further resources sent out at the end of this webinar, capturing everything that we've discussed today. So depending on the sector in which you operate and the potential exposure to and impact from biodiversity risks are going to differ. So every organisation either depends on or impacts the natural world in some way. And that's why we've created our briefing for finance. So I'd like to thank Mark, Cassandra and Silvia for giving us such detailed insights into how you incorporate natural capital accounting and biodiversity into your business and finance processes and how you're approaching the measurement and tracking of it. So you will receive links to the most relevant and useful resources, and the recording of today's session will be available in a week's time and also be shared with you via email. Of course, we hope that our webinars do not only provide you with information, but also allow you to explore what you personally can do to put this knowledge into action. So how will you translate what you have learned from this webinar to your work in the next 6 months? Please tick all that apply. So consider what my organisation could do to measure our natural capital, talk to my CFO or senior members, read the briefing for finance, or find out what your organisation is already doing on biodiversity and how finance can support decision-making in this area. These are all small practical steps that you can take to start thinking about capitals and natural capital. As Mark, Silvia and Cassandra all highlighted today, the very first step is just beginning on the journey. So let's see what you are all thinking about in terms of getting going. So the next workshop in our series is going to be on resilience on the 28th of June, and the link will be to register in the chat now, but also sent out with the follow-up resources. As we run similar webinars every month, we're keen to get your feedback to help make these as useful as possible. So please can I ask that you complete a feedback poll before you sign off, and I'll leave the poll running. But I just want to say thank you again to our speakers and to all of you who've dialed in. We hope to see you again soon, and we very much appreciate all of your time. And thank you to our panelists for making that time for everybody today. It's been a really good and useful discussion.